All right, welcome to the Real Estate Rundown. I'm Dustin DeHart with Keller Home Loans and
Nick Lehman with KW Las Vegas. Keller Home Loans, huh?
Yeah, new name,
Wow,
man. Yeah.
new name, new Dustin.
Yes. Lots to talk about today. Had a little 3-week hiatus. Good to see you.
Yeah,
We had some vacations, some illnesses, some company mergers.
Yeah.
It's been an eventful 3 weeks. Yeah, a partridge in a pear tree, something like that. And 3 golden. I don't know. I guess.
Okay.
But look, it's good to be back, my friend. We had some eventful things happening the last 3 weeks. We'll talk about
a lot.
Has been a lot, yeah. So Keller Home Loans, no longer Keller Mortgage.
Okay, What does that? Tell me more about that. What does that mean?
Well, all right, we'll start right off. Mine as well.
Is that where you wanted to go?
Get the elephant out of the room, right? I was going to talk about your, hobnobbing around the country and the world.
We can start there. Let's do it.
Yeah,
so
let's do that.
I went on 2 vacations. It is spring break right now, even though I did spring break early. I got to go to New York. Mm-hmm. So that was
really interested about that. How'd you like that?
New York was awesome.
Yeah.
I had not been there really as an adult.
Okay.
So did all of the highlight things. Rode the subway.
Yeah.
Went to Central
Which is
Park.
an event itself.
It
right?
was. Yeah, it was pretty interesting.
And it's so cool because you can literally, wherever you're staying, and next thing you know, you're at Wall Street or
for
this
sure.
or that. You
Yeah,
know what I mean?
literally. We were.
The food's awesome.
It
right?
was really good.
Yeah.
Super great food. Awesome bars. Had pizza, obviously.
Yeah.
Had the opportunity to do high tea at the Plaza.
Okay.
Which is
not sure what that means, but that sounds fun.
Like Pinky
shows?
in the Air.
Any good shows?
We saw Moulin Rouge.
Okay.
Fantastic. So I got to see a Broadway show. Did all the things. It was awesome time.
Peter Luger's? I gave you a couple restaurants to go to.
No.
Nah. All right.
I did not.
All right.
I'm sorry. Yeah,
right,
that's a bummer. That's a bummer. Yeah.
Damn it.
I actually forgot. So, now I feel bad. Instant anxiety. My chest is getting hot. So,
and Mexico.
Vacation too. Yeah, I literally just got back a few days ago.
Yep.
Mexico's awesome. We love Mexico.
Look
at that.
Look at that.
That's that.
Two
is
relaxed couple right
spa day, wifey and I, cabana day. That's bottom right.
Yeah.
There was a full moon. So that's actually the moon on the bottom, not the sun.
Isn't that cool? And you can see it like disappear through the ocean. I love that.
It was awesome.
Yeah.
It was awesome. And then top was a sunset the next day. So
where in Mexico did you go?
We were in Playa del Carmen.
Okay.
So you fly into Cancun and then do like 40 minutes. I got to tell you, like, I have got this hack down on the Mexico. Like,
yeah.
Oh yeah, from like transportation. People are like, "Are you safe? It's not safe."
Yeah.
And of course there was like that, the people got killed. Like,
There
was some shenanigans happening, but no, like we got it down. Got it down.
There you go.
Here's one hack I'll give you.
Okay.
We did no packed bags because it takes like an hour to get your bags.
Yeah.
And then you upgrade to Business Select,
Okay.
and you can avoid the check-in line.
There you go.
So for $50, one person on the way back, Business Select, and then you can get through all the.
Right.
So there you go. There's
go.
my 2 hacks for you. Don't check a bag. $50. Nick's vacation.
I love it.
Hacks.
So now,
Yeah.
We'll have a rundown topic in the future.
We could.
Yeah.
So that was my vacations. You had a merger.
Yeah, I don't have vacations.
So yeah, you were working.
I just have stress.
One of us has to take off. So what happened with you? We went from what to what?
Well, yeah, look, it's, as you know, it's been in the works for a while. I was one of the few that actually knew about it. But yeah, look, almost about a couple weeks from today, a year ago, I started with Keller Mortgage, right?
Okay.
I was at the same company for well over a decade. And the company before that kind of merged into the company. So, I don't really move, right?
Yeah.
And change is not, in my vernacular. I don't like it, right? But, I left for a reason, for opportunities, and saw things kind of shifting before they were shifting. And, look, the company was amazing, right? But they were struggling with a lot of things that a experienced, high-producing loan officer is used to having, right? Like products, right? Big one to have.
Might need that.
Yeah, besides, FHA, VA, conventional, there wasn't a whole lot to work with, right? And just the operations side of things, technology, tools, just it goes on and on and on, right? And, it was in the works, I guess, and then obviously what happened with the market didn't help. They just didn't have the right leadership from day one.
Sense.
They started as a small mortgage company with the biggest real estate company in the world and tried to grow it, and it just didn't work out. And now we have been bought by Mutual of Omaha.
Okay.
Right? So it's two
Omaha.
iconic brands, right? Really, it's pretty cool, right? Mutual
cool.
of Omaha and Keller Williams.
Yeah, absolutely.
And they've now named our company Keller Home Loans, right?
Keller Home Loans.
I'm
okay.
also Mutual of Omaha as well, so I can toggle back and forth when I need to.
I'm going to say Omaha like Peyton Manning every time I call you.
There you go. I like that. You throw an audible at me. Like you said, Keller Home Loans, you give me an audible. But look, really excited about cool. where it's going. Obviously I'm only, second week into the company and still trying to close out deals from our past company. But, it's enlightening to see that we now have everything I've needed to really succeed.
That's good.
Because right now, look, every deal needs to get closed, right?
Sure.
And we have the products, the programs, the pricing, the operations, the tools to get the things done, right?
Nice.
So I'm excited. We'll talk about more of this in future shows and rundowns. Even one of the products today, I'll throw in one of the rundowns, down payment assistance. And we have one of the programs that no other companies have. So, we'll start talking about those throughout the show. So excited to get going.
That's awesome.
It's been an eventful few weeks. It actually been an eventful 12 months, but change is necessary to grow sometimes, right?
So you had no changes for 10 years and 2 changes in essentially a year. Yeah.
But
so
3.
You're real comfortable,
market,
right?
Yeah, market collapse. And it's been
blood pressure.
Been a hell of a
okay?
Yeah, no, it's not.
It's fine. We got a defibrillator around here somewhere.
Who cares about
happens.
blood pressure? I got loans to close. But anyways, on top of that, speaking of roller coasters, the rates and market and everything. We literally, every show is just nothing that's not important to talk about
For sure.
now. I don't know if it was the last show we were on. It was probably the second to last show. I was, proud of it. Rates finally dropped under 6%. And I was one of the first to kind of the only ones that was really, bullish on that was going to happen and sooner than later. It only happened today, right? Because then we had that jobs number come out way higher than expected.
Right.
And literally since then, rates went up to almost 7.5%, right?
Just wild.
And it wasn't looking good. I'm like, oh, geez, it was just inflation numbers weren't coming in as soft as we wanted. And, sometimes unintended consequences happen, and that's what happened with the Federal Reserve. So, there was a banking collapse. I think most
two,
of
right?
Us, there was 2. The big one was Silicon Valley. So we'll talk a little bit about why that happened, and why it's leading to now rates coming back down again, right? So, on Friday when this got announced, we had a pretty good day for interest rates. And, there was chatter that the Fed's not going to do anything and, whatever. And then they met Sunday. They don't usually meet on Sunday nights, unless it's like a fantasy. They do have a fantasy football
draft.
Yeah, they do that in Jackson Hole where they always meet. Alan Greenspan started that's great tradition for the Fed.
Fantastic.
But this wasn't for the draft. This was to talk about a potential contagion in the banking system, right? So they came in and they're going to backstop it and go through, so they're going to honor all the deposits, right? So why did it happen? Well, it happened because of the Federal Reserve hiking rates so aggressively and so much that they were so myopic on one thing that they don't look at other things that could happen.
All the variables that can change.
And what happens, if you've heard this term, it's created an inverted yield curve, right? Which always means you're going to a recession, right? Every time that's happened. So what that means is with bonds, right? So if you invest in a bond, right, like a longer term bond, like a 10-year bond,
right,
you're supposed to get a higher yield on that than you would on a 2-year bond.
Makes sense. Makes sense, right? They're holding
now
your money longer,
case, right? Now you can literally go into a 2-year or even a 6-month bond, right? 10-year note, backed by, it's guaranteed by the government, so it's the safest investment there is. You'll get 120 basis points more on that than you would like the 10-year bond. Okay.
Yeah, that's
so why
sounds backwards?
Okay, so now let's go to the banking problem, right?
Okay.
So as a bank, right, you get deposits, right?
Sure.
From your customers, right? You're only required to keep 10% of those, right? So the other 90% you're going to invest and loan
Play
and,
with.
and
Yep.
make money.
Yep.
Now you're also going to pay a percentage to those customers on those deposits, right?
Sure.
It's not that much, right? But you're
Something.
investing in these longer term bonds that maybe pay 2% and you're hedging it. And that's what this bank did. Now, all of a sudden, when rates start to go up and you
Yeah.
have to pay these customers more, well, you're trying to finagle things. And now all of a sudden, customers are figuring this out and they're taking their
They're
money out.
withdrawing.
Right. And they're going
Right.
into other
Right.
investments. Right. And then all of a sudden, the capital's not there.
It's gone.
Right.
Money's gone.
Right. And, you know, there was some loopholes and their balance sheets looked better than it did, than it really did.
Weird.
Right. I know. Right. Good old same old mess we've always been in, right?
Yeah.
And then, you know, and even like Jim Cramer and Mad Money, like, no, buy, like 6 weeks ago, like that bank's fine, right? Meanwhile, some very smart people were looking under the covers
Right.
and going, I
Short
don't
it.
think it is that fine. And like all of a sudden, short sellers came
Yeah.
out, right? Now
Yeah.
they can't really sell any stock because it's tanking. And then, you know, word got out like Peter Thiel, I think he took out $1 billion or something, and that just led to a run of everybody trying to take out their money, and they don't have enough money to
Not
make
good.
that whole.
We all
Right?
can't run to
So-
the bank and pull out all
Right.
the cash at the same time.
Right. So this led to now the Fed is going to have to think about how, because look, it was pretty much set in stone on March 22nd. They were going to go 50 bips, right? As another rate hike, right? That's pretty much off the table, right? Almost 100%. So now it's like, okay, did they go 25 or even nothing, right?
Right.
And it's
Will be
about
interesting.
50-50, and it's
Okay.
going to be interesting to see what happens, right? So that's, you know, helping mortgage rates because we don't want to keep seeing these rate hikes, right?
Of course.
But it's also, look, when rates are so low, you've got a lot of money chasing few goods, right?
Sure.
Now we don't. When you're doing way less lending, and now we have a banking potential contagion, there's not a lot of money chasing, you know. So it's just the Federal Reserve just doing things without. You know, they don't really have a business sense of things, right? They're just, you know what? We got to get this.
Right.
You
Gotta
know, it's like a
handle-
doctor, right? If you go to the doctor and he gives you a shot, right, because you're sick, and then you're still sick the next day and he gives you another shot, right? And then it keeps doing it instead of letting that shot do what it's supposed to do.
Or maybe my ankle hurts. Like, how about you stop giving me a shot in my shoulder for my hurt ankle?
Right. Can you let it kick in and marinate a little bit, Doc? You know, let's see how this actually takes place. And that's what basically is happening right now. So, you know, look, it's a roller coaster with this right now. So rates are now not in 7.5, around that 6.5%. Today we had another good day for rates.
Nice.
Actually, we had a PPI, which is another index for inflation, was really good, or not really good, was better than expected, right? And now there's banking concerns in Europe, so here we go.
The Swiss one,
Yeah,
right?
so look,
good,
you know,
good times.
Yeah, and then I'm sure next week I'll be saying rates are back at 7 because of whatever happened. So I'm done guessing on interest rates, but right now they're coming down. And again, you know, the inflation numbers will start to come down once we get this shelter component out of this mess. We'll really start to see rates really go in the right direction, and they're going there right now. So who knows?
Good.
Right?
Good.
So, you know, other than that was a long-winded discourse there. On
That was.
it's hard to wrap that up in 2 minutes, but yeah.
That's why we did it first. You had more than 2 minutes.
Yeah,
But,
and now we have 1 minute to the rundown.
Well, let's get there now, and maybe we'll have some questions at the
Sure,
end. We'll just
yeah,
go
yeah.
right there. So the rundown is basically a hot potato, or we'll share topics. We'll talk about things relative to lending, real estate, and things that are happening around the Las Vegas area. And to start us off, Dustin, you're going to go first, and you got DPA loans.
Yeah,
on
let's
here.
talk about down payment assistance loans, right?
Let's do it.
So, look, They've been around for a long time, right? Remember, Nevada housing, home is possible.
Yeah.
That's the most popular one, right? That seems to be that most lenders offer, right?
Yeah.
And, I think it was about 5 years ago. Remember they were giving out like 20 grand and and a below market rate. It was ridiculous.
It was.
Right?
It was. I do remember.
It was gone like that, right?
Yeah.
Like it took over. And, since then, they've had programs. Last year they kind of been on life support. They just offered another one where they give $15,000.
Okay.
However, they're a tight bucket to fit in, right? Because you can't make too much income, and you have to have this score and this and debt to income ratio. But they do work for the right person, right?
Correct.
So there are a lot of down payment assistance programs, not just that one, right? Thankfully, at my new company, we have one that's amazing, right? It's instead of the 640 credit score, or 660, 680, it's 600.
Wow.
Right? Instead of 45% debt to income ratio, they don't have a max cap, right? As long as it's proved eligible, you're good, right? Income, it was the big one, right? So instead of the median income being 80%, which is typical for this new program with Nevada Home is Possible, they'll go 160% of the area median income, right?
Wow.
So that's about 63 grand. So now you can make 96 grand. So it really is opened up a box for people that I wasn't able to place in that I am now, right?
Okay.
And about 8 or 9 or 10 other down payment assistance programs that have a niche for this or that we'll talk about in the future. So excited about that.
That's awesome.
Look, guys, right now, even if you don't have the money for a down payment, Nick, sellers are still giving closing costs,
for sure. Getting concessions left and right. I mean, every contract I've been negotiating lately.
Yeah, we literally can get you in a house with not much out of your pocket right now. So call us. All right. Monthly numbers.
Yeah, I mean, it's been a minute since we met, and the February numbers came out since our last show.
Sure.
And what we need to talk about is what happened. So this is month of February. To put it in perspective, look at the units sold. So
that's good. That went up.
It did go up. Last month it was 1325. This month, so we had a 30% increase in the amount of homes that sold, which is
way
fantastic.
off of what we normally are.
It is.
However, heading in the right direction.
In the right direction, absolutely. Median price, look at that, stayed $5 less. So we're literally flatline, which is what we called. We felt that the bottom was here, wasn't going to go down anymore. It would just be scenario selling on what you could get as far as price or concessions. Look at the new listings, 2243. That is down 9%. So I had more homes sold. I have less homes hit the market.
Yeah.
Interesting, right? Which causes the units availability. Units availability last month, 5420. 5450 down to 4665, which is a 14% month over decrease in the amount of availability.
So simple. Yeah, that's not a lot of homes.
That's not a lot of houses. No. So simple supply and demand. I mean, what's business 101?
Yeah, you don't need an economics degree to figure this out.
Business 101 is supply and demand. So please help me understand, how could pricing go down if there's no homes?
I think the Federal Reserve could figure this one out. Sorry, Nick. Go ahead.
But the point is it's consistent, and what we're trying to do is educate people on some certainty, because that's where the fear comes in, is that it's uncertain, and the certainty is the proof is in the pudding. We have more sales, less homes on the market. How could pricing possibly go down? It doesn't. Business 101, supply and demand. It's not going to go down. People are not listing their homes unless scenario selling only. That's where you're going to find the margin for price reductions.
I've got some questions
concessions.
at the end
at the
here
end.
for you.
MSG Sphere.
The Sphere.
This thing. Have you seen the commercials? They're promoting.
Yeah, man, this thing, I've been waiting for this thing for a while. This thing looks amazing, right?
Yeah.
It is state of the art. Like it's going to take going to a concert to the next level.
For sure.
Right? To 11. Man, all right? and things don't even go to 11, but this one goes to 11.
It does in this case.
They got U2 to open up.
Yeah.
I am reading some things that the business part of this may be a little shaky.
Okay.
2.2 billion. I think it's doubled in cost over the last 3 years.
Standard inflation, construction costs.
Right? Those subwoofers in there, they cost a lot, right? And I started to think about it too, like, well, That's a lot of money. They don't have a sports team in there, even though Dolan owns it. Maybe he'll bring the Knicks over to us. Who knows?
They're good this year.
But, I was reading, there is a little concern about the business plan of things. They don't have a sponsor yet. That's, that they're trying to ask a premium for that.
Sure.
Even when you look at U2, they paid them like $10 million, and that's not accounting for the 90% U2 makes on the tickets, so they're kind of washing on that one. I think they're just trying to get a big name in there.
Yeah, you got
and they want to have residencies in there, but a lot of bands are like, I don't want to compete with all the visuals and any of that. Like, well, call Tool up, they'll be fine. Or this is what we need to do: Pink Floyd. If you can get Pink Floyd back together to open this bad boy up, all your financial concerns will go away. Look,
done.
I did read movies, believe it or not, are going to be one of the biggest draws for revenue, because they're going to make it's a 3 football field long immersive visuals with speakers on the floor. I mean, so we'll see. It's going to be awesome to see. But it's Vegas, baby. We'll make it work.
They'll make it work for sure. Right. They got it.
What do we got? High speed. We've been talking about this for 15 years now.
No, it's real now.
No,
it's
I
real.
don't. Until I actually buy a ticket, I don't believe it.
It's real. Bright Line. This is real. Okay, they have announced the date, 2027, or at least the year 2027 of when this is going to happen. Apparently, the funding's there now. They have all the approvals. Construction starting later this month. Okay. So this is the real. It has been. I mean, I feel like I was a child when I heard about this train.
Oh my God! Yeah.
That's gonna cut down emissions.
I can't wait.
Traffic.
Yeah, I hate driving to California.
So no, it's cool. But here's some stats on it. I looked it all up and spent some time researching. So it'll have top speed of 200 miles an hour.
Okay. I was thinking 240 would have been good. But
I think it goes 212 max.
Sorry, dude.
It'll cut the travel time to LA for 2 hours, 2 hours and 15 minutes.
So does it go to LA or does it go to?
So it's going to go to Rancho Cucamonga Station 1. Okay. And then there's going to be some sub-metro stations.
Well, if you're not going to LA, you got to go to Rancho Cucamonga. I'm sorry.
Listen, man, that's where Ice Cube and Friday went.
Yeah.
So 2 hours and 15 minutes. It's 218 miles is leg one. Here's the cool part: 35,000 jobs will be created, 1,000 permanent, 10,000 construction. The green part was, I didn't know a lot about all the CO2 emissions it was going to remove, but that's definitely one of the benefits. Okay. No word on pricing of tickets. That would be interesting. But what I thought could be interesting for real estate is I already know people that drive 90 minutes.
Oh, there you go.
100 minutes.
Oh, man, I didn't even think of that.
So if you could calculate drive time plus property taxes, is it now interesting for somebody to live in Vegas, take the train to work in LA?
No, it's the other way around, because you know how many people call me every week that live in LA and work there, but they want to buy their primary residence
in Vegas. Right. That's what I'm saying.
I'm like, dude, that doesn't work. Now maybe it does.
I said that backwards. Yeah.
No, I didn't even think about that.
I mean, I'm just saying, you're already in the car for 90 minutes.
In 4 years, we're going to have a slew of new. Damn it.
It's just consistent that Vegas is. Like where is this crash coming? Like nothing says I'm going down. Like nothing says that.
Wow. Speaking of going down,
went way over
mortgage insurance is going down for FHA. So big win. We need some wins once in a while. So right now, with FHA, it's a fixed mortgage insurance payment, right? Unlike conventional, where it's credit score, loan to value, a lot of things factor into what that monthly amount is. Right now, it's at 85 basis points, right? Okay. And that's going down to 55 basis points, right? So on a $100,000 loan, that's going to save you almost $100 a month, right? And I'll tell you, Nick, there's so many deals that I'm literally trying to approve to that last dollar, right? Or I know I'm approved to 300. Can I get to 325, right? Well, this will help, right?
Okay.
And look, FHA gets a bad rap with real estate agents, right? I don't know why, but I think FHA loans are going to start really hitting, with the higher loan amounts that we have at almost $495,000.
Amazing.
With the reduced mortgage insurance, they typically have a better rate than conventional loans. It's a good opportunity for people. Look, affordability is tough right now, so we can take every win we can get.
Every dub.
And I'm happy that this is happening right now. So
that's good.
Could you see how happy I am? I'm like,
saw it.
dead.
You
I'm
were so
ecstatic.
excited.
Like, yeah, about to jump on a train to Rancho Cucamonga. Is Rancho Cucamonga in the house? All right, so I didn't need 2 minutes
That's
on
fine. You made up
FHA
for the
mortgage
extra
insurance
time.
premiums. So how about buy
that
now?
Buy now. Yeah. So, again, the narrative is, do I buy? Do I not buy? Listen, if you don't own a house, what are you doing?
Yeah.
How do you're renting, right?
Yeah.
You either own or rent. Like there's no other, this isn't a trick question. So I pulled this stat, check this out from Census.
That's pretty clear.
So what happens when you buy a house? Does your payment, is it the same? It
Yeah,
is, because
it
it's a 30-year fixed, right? Well, here's rent since 1988, which isn't even 30 years. That's what, 25 years there?
Yeah.
Look at that. That's your payment's not the same.
Yeah.
If you bought a house in 1988 and you just rented it, guess what? Your payment's not the same.
Yeah.
So let's go to slide 2. So here's something interesting, right? Slide 2. Here is the national average for owning a home for the last 30 years. That's 289%. And as I just said, your payment stayed the same.
Yeah.
Yet on the previous slide, rents have not stayed the same. When has rent ever stayed the same?
Even this year, it's gone up.
Gone up.
3%.
Yeah.
I mean,
it's never the same.
Yeah.
I mean, maybe it's up down $50 here and there. It hasn't gone down in a long time. Over time,
Right.
consistently up. So when people are like, "Well, I'm waiting. Should I buy now?"
Right.
The answer is, if you're not buying, you're renting. Rent is not consistent, has never been consistent, and has gone up over time.
Yeah.
Housing, your payment is the same every single month, and over time, you make money.
Yeah, and your mortgage company's not going to kick you out of your house like your landlord.
Hey, I'm selling it, or you can't do that. Not to
yeah.
mention all the other perks that
Yeah.
it's yours, and what you get to do with your personal residence. Like, I'm just doing sheer math. Like,
Yeah.
if you don't own, you rent. Here's rent over time.
Sure.
Here's buying over time.
Yeah.
Payment's the same, and I make money.
Yeah.
So, this timing, this market thing.
I have people thinking they're timing it in 3 months from now. Like, what are you timing? I don't really get it. But hey,
you'll get a lower rate and you'll pay more.
Right. Exactly. You
So,
won't get
sure.
these closing costs, and the house will probably be.
Sure.
There's multiple offer situations happening right now.
Still,
right? Like,
yeah.
it is for real, and it's March. And 3 months from now, it's going to be tough to get all of these added advantages as a buyer.
For sure.
Yeah,
the time is now. I mean, we've been saying it, and our job is, again, to just continue to educate people on, like, look, it's just math. Let's remove emotion from it. It's just mathematics. And as long as you invest in real estate over time, you're a winner. Like, that's just, it's been proven time
Keep
and time
talking, because I actually have a stat if I
time
can
again.
find
You
it.
want me to fill some time?
I probably,
okay, fantastic. No, so the Sphere train, I mean, those are two things I'm super excited about.
So since 1941,
okay,
all right,
that's
we're 73.7-1 of homes going up in value. You know what I mean? Throughout the nation, right?
Okay.
That's a Hall of Famer if you were in the UFC with that.
73.7-1.
Look at that.
Wow.
Not too many.
This is annual appreciation. Is that what you're saying?
Every damn year since 73 times versus 7, and I think 1 we stayed flat.
Yeah.
Right.
Imagine if we
There
could
you
go to
go.
a sports book with that.
And the years that we went down, well, that's because we went up so much, or we had banking collapses
Yeah, you
and
needed a
mortgage
correction,
meltdowns.
for sure.
So best time to buy a house was always yesterday.
For sure.
Right? What's the best time to buy now? Today. Right? So get out there and let's get you pre-approved. Look, again, rates are rates, right?
Mm-hmm.
They change daily. Here's what I know that's going to happen tomorrow with rates. They're going to
Tell
either
me.
go up, down, or stay the same, right?
Okay.
No one knows. There's a lot of uncertainty going on, right? But having the certainty of having your house, right, and you have that fixed payment, and knowing, look, if rates come down, I can even have a lower payment,
Sure.
right?
The opportunity to refi.
I don't know. Last time I checked, the number one way for our country that's built wealth is through real estate,
housing.
right?
Yeah.
And
I don't know anybody that's refied their lease agreement.
No, right?
So if it does go down,
Right,
you have the
right.
opportunity to make it go down,
Yeah.
and then over time, you've actually built equity.
Yeah. So, and the last thing with the supply as it is that I think now sellers are just like, hey, I got a 2.875% rate. I'm not selling, right? And
Great
until
question.
rates get to that under 5% range, we're probably not going to see a big jump in supply.
No, there's no reason to move right now, which is why you've seen the lack of inventory.
Yeah.
Somebody locked in under 4, unless a life event.
Right.
And that's all we're seeing. It's people that got a job opportunity, people that, you know, have a baby, getting divorced, somebody died. Like those are the only sales that are happening.
Sure.
And that will continue to be the case. And there's no reason for, you know, me at 2.37% to list my home for sale.
Yeah. No,
I'm
exactly.
not going to do it.
Yeah.
So. All right, good show, man.
That was a
we
great
breezed
show.
through it.
Nick, how do they get hold of you?
Yeah,
brother?
best way to get a hold of me is my direct cell, 702-289-5200. Always on me. Call, text anytime. Dustin, how about you?
All right, let's see if I got my new. There it is. Producing branch manager. We can't get rid of that, though. That's the best. All right, been a great show, Nick. I will see you next week.
Sounds good, bro.
All right, thanks, guys.